In 2018, more than 1,100 economists signed an open letter to Congress opposing the move, warning of price hikes and a decrease in U.S. exports. But the warnings didn't stop the tariff raise, just like it failed to do nearly a century ago. The Tariff Act of Smoot-Hawley of 1930, under the Hoover administration, raised U.S. tariffs on over 20,000 imported goods during the Great Depression. U.S. exports and imports both plummeted by over 50%.
In 1930, the Republican-controlled House of Representatives, in an effort to alleviate the effects of the, anyone? The Great Depression, passed the, anyone? The tariff bill, the Hawley-Smoot Tariff Act, which, anyone, raised or lowered? Raised tariffs in an effort to collect more revenue for the federal government. Did it work? Anyone? Anyone know the effects? It did not work, and the United States sank deeper into the Great Depression.
Senator Smoot and Representative Hawley thought tariff hikes were the solution to foster domestic absorption to overproduction as a result of technological advancement. They thought they could help beleaguered farmers. They were wrong.
Now, the tariff came in 1930, the Smoot-Hawley Tariff, and of course that reduced tremendously imports coming into the United States. They were reduced by about 70%. So world trade just started shrinking. You had one of the big economies in the world going into depression. Then the tariff came on, and that restricted imports coming into the United States. And other countries reacted by putting in tariffs of their own. And so that stopped exports going out from the United States and other countries. So the tariff was, I would say, the icing on the cake that really pushed things even lower in the Great Depression than would have been the case just due to the collapse in the money supply.
The Smoot-Hawley tariffs have a bad reputation, and for good reason. The higher tariffs reduced demand in the U.S. economy. They generated uncertainty that dampened investment in the U.S. economy, and thus undercut economic growth. The purpose was to hurt our trading partners, beggar thy neighbors, but beggar thy neighbor policies inevitably hurt the instigators as well as the target country. And so what we have found is that soon after the Great Depression, and to move out of the Great Depression, the United States promulgated the Reciprocal Tariff Act of 1934, which started a process of negotiating tariff reductions to wind down the damage done by the Smoot-Hawley tariffs.